In many parts of the world, we continue to see countries ease their monetary policies. But what about Korea? The central bank will hold its monetary policy meeting tomorrow. Attention is on whether it will follow the path of its global counterparts. Arirang News' Ji-hye has this story.
So far this year, 17 countries and the European Central Bank have eased their monetary policies, either by lowering their key interest rates or introducing quantitative easing programs. Canada, Switzerland, and 11 emerging economies like India and China are in this race, which comes as the countries try to prop up their ailing domestic economies. Now, pressure for further monetary easing by Korea's central bank is piling up. But analysts say it's unlikely the central bank will take action on Tuesday.
This month's monetary policy meeting is taking place right before the Lunar New Year holiday, and the central bank has not signaled a rate cut, so it will keep the rate unchanged for this month.
Korea's Finance Minister Hwang also emphasized last week that it's more important to push through structural reforms than to debate over a rate cut. Still, analysts expect a rate cut to take place sometime in the second quarter this year.
The Korean economy is not showing signs of momentum for a solid recovery so far this year, just like in the fourth quarter of last year. To give a much-needed boost to the economy, the central bank is expected to cut the rate in April or May before the U.S. Federal Reserve starts to raise its key interest rate.
Korea's low inflation rate is also giving the central bank room to trim its key interest rate. Consumer prices were running below the BOK's 2.5% to 3.5% inflation target band for more than 2 years in January. Some analysts say, however, that the central bank will not join the global move toward monetary easing, as there's no clear sign of it affecting the local financial market. Hwang, Arirang News.